Hey guys, welcome back. In today's video, I'm going to be showing you a simple backtest I did using the fear and greed index that we have been calculating over this time. And I have a tutorial on how to calculate this index, but I have been saving the values calculated each day. And so we're going to be using those to see what would happen if we bought in extreme fear and sold short in extreme greed. But hopefully you have been saving these values, or you can start saving them so you have some data to work with. So a couple things to note: we have 7 factors and an overall rank, which, if I remember correctly, is using the median score of all of these factors. So in our R markdown, we're going to be reading in all of those files and saving them into FG, which contain all the calculated values of the index. So remember, we have 7 factors, we have the average score and the median. So this table is an XTS object, and we're going to go ahead and merge that with our stock data in the next block. But first we need to define the levels of extreme fear and greed, and also the number of hold days after we get a signal. So whenever we get a signal for fear, we're going to be purchasing a stock and hold it for 7 business days. And we're going to sell short whenever it exceeds this greed value. And we're going to be using the same number of hold days as well. Now in the next block is where you define the ticker symbol you want to backtest. So we're going to be using SPY. We're going to get data. We're going to add our median score and remove any NAs. Now we can go ahead and add the signals. So we're going to start off by creating a signal column. Whenever our fear and greed index is below or equal to extreme fear, we're going to place a 1, which is a buy signal. Whenever it's above, it will be a -1 to sell short, and flat otherwise. Hopefully by line 44, your stock data will have the daily values for the stock that you chose. We're going to have the fear and greed index added as a column along with the signal. Once you have that, we're going to build a function where we pass in that object along with the number of hold days. And this function will generate the trade results. So we're going to extract the long and short cases. And for each of the cases, we're going to use our stock object and extract the close price. And if the close date is somewhere in the future, so we don't have any data for that, it's just going to use the opening price as a temporary placeholder. And it's going to return a data frame where we have the start date, the close date, the signal or the direction, the fear and greed index level, the opening price, the close price, the number of points between the end and start price, and lastly our percentage return. So that's if we do have any cases on the long side. Otherwise it's just going to return null. We're also going to be doing the same for the short cases. So this will be the exact same thing, except that our strategy points and percentage return will be flipped since we're shorting. After we have generated the trade results for the long and short cases, we're going to combine them both into a single data frame, which is what is getting returned. Now we can go ahead and use that function to extract a trade table. So we're going to pass in our stock object and the number of hold days. And if we take a look at that table, for my data, we have 25 instances. Now from here, we're going to create an XTS object using this table by using the close date as our index and our strategy percentage. And we're going to compare that to the actual stock to see how this strategy performs compared to buying and holding. So back in our script, we're going to convert that table into an XTS object. We're going to combine it with the stock performance. We're going to fill any NAs with 0, and then we're going to plot the results. So if we take a look at the chart here, we see that the black line is our strategy versus buying and holding, which is this red line. Now we have been in a bull market, so buying the dips when we get extreme fear may have been reasonable. This may not work if we're in a bear market, but I don't have that much historical data to work with. Well guys, this concludes the video. I hope this was useful information. This was just for backtesting, and of course this isn't investment advice, but I'll leave a link down in the description area to my Patreon where you can find the script in case you want to run your own backtest or modify the script in any way. Please consider subscribing to my channel if you haven't done so already. Thank you so much for watching, and I'll see you guys in the next video.